Hi, I'm Nick Clark. I'm the Chief Executive of Aukett Swanke. I'm here to talk about our results for the year to the 30th September 2023. I'm joined by Freddie Jenner, our Chief Operating Officer, and Tony Barkwith, our Group Finance Director. So the results were pretty good. Revenue is up 100%. We've gone from 7 million to 14 million. And we've moved from a small trading loss of 72,000 to a small trading profit of 28,000. So there's really two components to the revenue growth. The big one is the acquisition of TFG. So that came halfway through the year. That's the business that Freddie, you and I are from. Do you want to talk a little bit about that and what it is and what it does?
Yeah, absolutely. So Torpedo Factory Group, as we're aware at this point, was acquired by Aukett Swanke back in March 2023 and had a really strong last 6 months of the financial year. So I think we contributed 4.8 million to the turnover of the overall business and 400k of profitability after management charges. That was predominantly down to the TFG stage side of things. So looking at Torpedo Factory Group, there's a fairly straightforward structure there. There's Torpedo Factory Group Limited, which is the parent company, which holds the freehold property over in West London. And then there's two main trading subsidiaries, which is Torpedo Factory Limited, with a base over in West London. And they focus mainly on audiovisual integration, master systems integration, and service and maintenance revenue. We've then got TFG Stage Technology Limited, who are based over in Manchester, and that's mainly on the theatre and educational side of things. Fundamentally similar businesses on similar systems, with a collusion of staff as well, managed by both. TFG Stage Technology specifically had an amazing last 6 months of the year, contributed a lot of profits. Torpedo Factory Limited did as well, just above the break-even point, and Torpedo Factory Group Limited, losses there, but as a result of the freehold property being there and just some management charges and rent being passed down. But overall, a really successful last 6 months of the financial year.
Yeah, what I like about the TFG stage business was it managed to deliver its biggest ever contract by a distance and did it really well.
And that was fundamentally finished as at year end. So the vast majority, bar some snagging work, was done by the 30th of September, and practical completion is now finished on that project. And I think just looking at that on its own, it was a hugely successful project, largest one that we've ever done for TFG Stage, and was profitable as well. And I think the outcome of what we delivered there from a technical point of view was really fantastic.
And then Tony, the architecture business has also done really well. Do you want to tell us a bit about that?
Yeah, the architecture business, which was historically the predominant part of the group. Historically, we've diversified through the geographies in which we operate. We had a significant international presence. Over the last few years, the strategy of the business has been to focus on our core business in the UK, which has grown significantly in the year. So we grew from revenue after subconsultants, so the core revenue produced by our technical staff, increasing from 7 million to 8.7 million a year. Weighted towards the second half of the year, so significant recruitment in the second half of the year, predominantly through our Veritech brand, led to a stronger performance and stronger result in the year, albeit we would expect that that doesn't fully translate in the first year due to the amount of recruitment costs and other associated costs that come through significant increases in staff load. We saw a good result from our continental European operations with our investments and joint ventures in Germany. Those are our core markets that we continue to focus on as our biggest markets by number of staff and turnover. And that's the first year that we've really seen results that haven't been weighed down by the legacy of COVID.
One of the things I like about Veritech is it doesn't have the planning and pitching risks that a full-service architecture firm has. So Veritech is an exec architecture firm, so it works with design architects, and that means that they're taking on a lot of that risk.
Indeed, and it gives Veritech the opportunity to work collaboratively with other architects. It brings Veritech into later stages of projects where you have more security over funding and timelines, and enables Veritech to work on substantially larger projects than may otherwise be the case for an architecture practice of its size.
And then we have Germany. Although we've disposed of most of the international architecture practices, we still own a quarter of a Berlin practice, and we own a 50% joint venture in Frankfurt.
Yes, we've had long-standing relationship with our fellow shareholder in those operations, dating back over 30 years. We built up a substantial operation in Berlin with well over 100 technical staff that's been trading profitably year after year through the COVID pandemic and afterwards. That translates into a share of profits for the group that's reflected in our continental European operations segment, showing over 400,000 profit before management charges for the financial year to September 2023.
Yeah, so in effect, because we don't own a majority, we don't consolidate their turnover in our results, but they do nevertheless provide a meaningful cash contribution each year.
Indeed, and we do show as a non-standard reporting metric in our accounts the total revenues under management, where users can see the scale of those operations. And in the notes of the accounts, the full numbers are disclosed, but we just consolidate our share of profit in the profit before tax number.
We should talk about the balance sheet as well at the 30th of September 2023. Obviously, the acquisition of TFG was share for share, so it's brought in TFG's assets. There's also some liabilities. Those debts include a short-term mortgage and a CBILS loan, but also there's a property asset.
Yes, the balance sheet's dominated by a freehold property. We're looking to sell that freehold property as it's surplus to requirements for the business, and we'll pay off the mortgage that's remaining on that building.
And because we're doing that within 12 months, both the asset and the mortgage are shown as repayable, as current assets, because they're repayable within the next 12 months.
Indeed, and the mortgage similarly is shown as a current liability. So we have quite a significant borrowings number on our balance sheet as current liabilities, because it's the combination of the entire mortgage plus the payments over the next 12 months on the historic CBILS loans.
And the trading profit overall, we've gone from a trading loss of 72,000 to a trading profit of 28,000. Neither of those are big numbers, but I guess the interesting point is that we are a business of two halves. It's lost money in the first half and then made quite a strong recovery in the second half.
Yes, and we reported an interim loss for the 6 months to March 2023, showing trading loss from operations of just short of 300,000. So it was quite a turnaround in the second half of the year, and we've seen that across a number of the business segments. As we've mentioned with the architectural businesses, that recruited significantly second half of the year and had a stronger second half. But we've gained from the profits reflected from Torpedo Factory Group in the second 6 months and from the point at which we consolidated.
Absolutely. I think it's been a really strong 6-month period. As we were talking about earlier, it's definitely been a transitional period of time in terms of bringing on the Torpedo Factory Group company, and later on towards the end of the financial year, Anderson Kern as well. It should be noted as well, when looking at future results as well, Torpedo Factory Group were only looked at for 6 months of the financial year, Anderson Kern for 2.5 months. So this will lead to increased turnover when looking at a consolidated 12-month period.
Yes, I guess it's really, if we start to think about the current year, we're obviously going to have a much stronger turnover number because we have got a full 12 months of Torpedo and Anderson Kern and then further acquisitions in the year. Although it would be fair to say that TFG, like the architecture businesses, tends to lose money in the first half. And so we have got another year where there's a first half loss and hopefully a second half profit.
I think that's exactly what we're aiming for. And it's a seasonal business. Torpedo Factory Limited, Anderson Kern to some degree, but especially TFG Stage, performed better in the last 6 months. Christmas always terrible for trading, sadly. But that summer period, especially on the TFG Stage side, when we're looking to get into educational environments and theatres, summer holidays, when kids are away, parents are non-focused, you can get into these schools, you can get into these venues, and we really see our revenues increase during that period. So confident that that's going to be the case again this year.
So the year to the 30th of September 23 has the two acquisitions, TFG halfway through the year, and then Anderson Kern just before the end. Then obviously in the current financial year, we've done EcoDriver in October and Vanti in March. Those last three businesses really, while relatively small, are in many ways the really exciting ones. because they mark our transition to being a provider of smart building services in addition to the core architectural business.
Absolutely. And with these, a lot of this is proprietary software, but it gives us a touching point with these buildings, with these customers over a period of time. So it's not just a one-off architecture or installation that the client then has embedded with them for the next 10, 20, 30 years. We are touching base with them constantly with the proprietary software that we have engaged with them to help improve their experience, both from a building perspective and operational performance.
Traditionally, architecture and its relationship with its clients have limited windows associated with the lifetime of a building. We come in before the building's built, we design the building, we see it through to completion, and then we invariably don't revisit the building. We might come in to do occasional pieces of work, but apart from refurbishment work and small bits and pieces within the building, the architect moves on. The architect has got strong relationships with its clients and will move on to future buildings with that client. But unless we're revisiting and having a complete overhaul of that building, a complete refurbishment, we're unlikely to be materially involved in that building again. And that has limitations on how far the architecture practice can grow, and has reliance on those key relationships with clients to keep serving us with opportunities for bids for new projects.
Yeah, I think one of the real strengths is the contacts we bring in the property world. That the last two acquisitions in particular have really struggled to get their proposition to market, because at the point they arrive, the building is already too far down the road to be turned into a smart building. The attraction of this is that we get to go in right at the beginning and say, as architects, this is our vision for the building to be smart. They're all going to be smart buildings soon enough. And we can really be at the start of that journey and helping clients see that and understand what they need to do and bring in those services right at the beginning. And then the advantage of having software-based businesses is that those licenses can be scaled much faster than overhead. We don't need twice as many developers to sell twice as many licenses. Unlike architecture, where we need twice as many architects to do twice as much architecture. Or in the integration world, even in master systems integration, we need more capital, we need more people in order to do more work.
Yeah, I mean, with the IP software that we've got in place now, the development has already been done. That was the huge cost to get it up and running, and to scale that and have increased sales to our clients and customers, the overhead related with that is really quite minimal.
Thank you both very much for joining me and talking about our results for the year to September.
Enjoyed it.
The next results will be our interims for the 6 months to the end of March 2024. They'll be out at the end of June, and we'll be reporting further on our progress as we develop as a Smart Buildings Group with what should be a very exciting time ahead.